So I'm joined now live from Sydney by Sean Callow. He's senior currency strategist at Westpac. So welcome to you, Sean. Let's start out with where the currency markets are likely to be focused today, that big non-farm payrolls figure.
Yes, absolutely. We've been waiting for these two events for quite some time, really. The ECB decision, and that didn't disappoint, providing such a big boost to the euro. But the payrolls report, of course, is very important as well. And US yields have already risen, perhaps partly knee-jerk response to the ECB, strangely enough, and also the low jobless claims numbers. So they are heading higher, and we do expect that there'll be a pretty strong number with the payrolls, at least a headline of 220,000 jobs and with upside risks. So we think that maybe that'll lend a little bit of support to the US dollar from the yield point of view.
If you look down the road a little bit, are you in the camp of Larry Fink of BlackRock, who says, he's a big buyer of US dollars because he says the outlook for the European economy is a bit uncertain, especially given the strong value of the euro?
Well, we've been trying to push a bullish US dollar view for quite some time, and it hasn't really worked out too well for us recently. Obviously, the yields are working heavily against the US dollar at the moment. Against the euro, we hear ultra hawkish euro, whereas Ben Bernanke sounded as though he wasn't in any hurry to change US monetary policy. So while we actually do agree that the US economy is likely to substantially outgrow Europe this year, we're not likely to see that on yields. And when you look at the numbers, about 85% of the monthly inflows to the US by foreigners are actually in bonds rather than equities. So I think that the yield story just does continue to hold the dollar back for the time being.
And as far as the euro, do you expect it to move up a little bit more in the shorter term and then fall back again? What's your prediction there?
Well, obviously, a lot depends exactly on how the payrolls number comes out today. But I would say that unless it is an extremely strong number that really gets the US dollar moving, gets yields sharply higher, then probably, yes, people will put more money on the euro. They will test that 140 level and see if they can go much beyond that. Because obviously, it's territory that we've seen before. And clearly, the ECB, if it wants to be hawkish on interest rates, then it can't expect to have a weak currency as well.
So we spoke to Julia Gillard, the Australian Prime Minister. She told us she's concerned about the strength of the Aussie currency. Where do you see that currency going over the course of the next few months?
Well, it's likely to stay pretty strong. I suspect it's going to underperform the likes of the euro and sterling over the next 2 to 3 months while the European countries are looking to tighten policy, and the RBA, we think, won't touch interest rates till at least the third quarter this year. So it probably struggle a little bit there, but against the US dollar, it's probably going to hold up fairly well. The broad ranges say 96 to 103 perhaps. I just think that with Australia's commodity prices so high that it's hard to get too bearish on the US dollar. Sorry, on the Aussie dollar, sorry.
Right. Sean Callow, thanks very much.